Hi, quick video update on what's going on in the world, the economy, the markets. Still reeling from Janet Yellen's words last week that the Fed is not going to raise interest rates anytime soon. As I've been saying in my newsletters, I didn't expect it this year. We have massive deflation across the entire developed world. I don't expect to see interest rates rise at all this year. There's still a possibility, September, a lot of people think September. I just don't see it. We still have a lot of deflation. The Fed is still printing money, still doing some quantitative easing. You can see what's happening if we don't do the quantitative easing, because what's happening in Europe. They have massive deflation. You're now paying banks to hold your money. Interest rates over there are negative 0.2, negative 0.3, which means you're paying them to hold your money. So you have deflation across the entire developed world. A massive quantitative easing started in Europe just a few weeks ago. Japan started there, another massive quantitative easing program. It's about their 15th in the last 20 years. They're still a bug in search of a windshield. Long way to go for Japan if they ever come out of this. We're, have very slow growth. I don't see a lot of inflation. Baby boomers are still retiring faster than they can be replaced by the Generation X. Remember, we have 90 million baby boomers retiring, and every day 10,000 baby boomers are hitting 65 years old, and that happens for the next 17 years. Massive deflationary situation. They retire, they die faster, not replaced by the Generation Xers, who are only 65 million. That, of course, changes in 2023. The good news is in 2023, we have the Echo Boomers, the kids of the baby boomers. They hit their peak stride. There's 85 million of them. So good news is, yes, we're going to have a good, positive economic situation in the around 2020, 2021, because the market will start to discount it a couple of years ahead of time. But for the next 4 or 5 years, it's still going to be difficult. I still think corporate earnings will be better than expected. Funny thing is, we're 2 weeks out, or now we're a week out from corporate earnings. As what always happens, as I call this in my newsletter, the pre-earnings nap, when you get within about 2 weeks of earnings, the market seems to pull back because everyone starts to get nervous that earnings aren't going to be as good, they're not going to be as strong. A lot of it has to do with the blackout period. There's a 15-day blackout period corporations have to use. They can't say anything about their stock or do any stock buybacks right before the earnings announcement. So stock buybacks are huge in the marketplace, as well as you don't have any good news about companies. So all you get is fear and the bad news. Therefore, that's what we're having. People are nervous once again that earnings aren't going to be as good. Market has been going down the last week or so, or going sideways. As what's normally happen, we go down typically right before earnings, and once earnings start to come out, they tend to be a little bit better than expected, and then the market starts to rise again, which is what I see. Again, it's not a no-risk situation any means. Always invest for need, not for greed. Situation is no different than ever. If you're retired or close to retirement, you can't afford to lose this money. So always get the best return that you need, but with the least risk possible. It's what we do for our clients every single day. Don't take more risk than you need to. Don't put yourself at a situation where you could lose big chunks of money, more than you want to lose or could lose or can afford to lose. And always try to get just sort of what you need out there. I think the market's going to be fairly strong. I do think we're going to switch over to smaller caps. They're less affected by the strong dollar. Larger caps are big companies who have a lot of international sales are going to be much more affected by the stronger dollar. And you might see their earnings get impacted more. Smaller companies, a little bit less so, and not so subject to oil price fluctuations as well. So I hope this helps. If you have any questions whatsoever, give me a call, and always be sure to listen to the radio show. I talk about these much more in depth on KFBK Saturday at 1 p.m. And starting next week, KFBK asked me to do another show, and they'll be picking it up on Sunday morning, 6 a.m. So enjoy. Thanks for listening, and I'll talk to you soon.